So, what awaits for us today and tomorrow? First, of course, a very busy business program, about 100 interaction sessions on the new technological trends, new markets, the transformation of business model, as well as integration of the cutting-edge technologies in our reality. 2 offline stages as well as 2 online stages. Also, we have a startup bazaar, which is an exhibition of technological projects that represents different startups as well as regional Skolkovo operators. And we have also very large stands of our partners. We have this organized in an online format as well as in the offline format. And of course, networking. And with the help of this service, you can have a chat or a meeting with any investor, speaker, startup, a representative of a corporation in a personal account. We have also mentor hours. Within them, the startups can present themselves to professional mentors, and they can get the feedback on how to pump up their business idea and reach the new level. As well as we'll have the pitch of startups. Come to us and just see how young entrepreneurs motivate investors to invest in them. And we also have short Q&A sessions on the Pluto stage. Go to talk with speakers there and please see our agenda. But just remember that going into the outer space of technological opportunities, please wear gloves and masks as well as observe social distancing. Because when it comes to the safety, this comes the first. And so now let's talk about how to attract investment in your startup. And now I'd like to give the floor to our moderator, Alexander Chaykin, the managing partner at Skolkovo Ventures. So the floor is yours. Dear colleagues, good afternoon. Thanks a lot for being with us. Today we will talk about how to attract investment to your startup. Well, the participants of this panel know about this because they do it on a daily basis, but they don't attract money, but they invest them. And now I'd like to represent our guests today. We have Islam Midov from the corporate fund of MTS. Then we have Mikhail Szalontay from Flashpoint Venture Capital in an online format.
Коллеги, а есть еще на видеосвязи люди, мы их видим?
Dear colleagues, how many participants are joining in an online format via the video conference? Can we see them?
У меня на плазме только Михаил.
I can see only Mikhail from Flashpoint Venture Capital. Yeah, I believe that we have everybody here. So then we have Ilya Korolev from IIDF. We have also Mikhail Kireev from RDIF. Good afternoon, everybody. Okay, great. So now I'd like to give the floor to each of you, to our representatives, just to say a couple of words about you and about your fund. Islam, let's start with you. Yes, okay, thanks a lot. So I represent and manage the MTS corporate fund. So it's a classical story. We invest at early stages, up to Series A and B, up to 2 million of USD. And our final mission is to be smart money for startups first, because, of course, of our opportunities and capacities as a corporation. And we would also like to develop our ecosystem due to monetary investments. So it's a very classical story. Okay, colleagues, who would like to be the next? Michael? Yes, I'm here. It's my pleasure to tell you about myself. I'm not sure whether you can see my screen because I've shared it and I've even drafted 2 slides to make it easier for our viewers. Could you please share my screen? It would be of great help. So at Flashpoint, we've created this group actually about 10 years ago. We have $350 million in our management. And what distinguishes us is that we have about 20% of our main own assets in management. And we support those startups that come from the previous Soviet countries, or also from Eastern European countries and Central European countries, as well as from Israel. And we develop global businesses. We have about 25 in-house professionals from Riga to Warsaw, Budapest, Tel Aviv, through Moscow to London. We have 3 investment products. We've done more than 30 investments, and we also have more than 70 plus follow-on investment, and we've had 9 exits over these years. So as I've said, we have 3 products. The main one is the venture capital, and those are the investment in Series A. And in this product, we have 3 funds. In 2020, we launched our 3rd fund, and it accounts for 100 million USD. The first 2 funds were a bit less big, about 20 and 50 million USD. And in 2020, we understood that in addition to the venture capital, we can also develop some other products and other investment products when it comes to the investment in technological companies. So we also launched a product on venture loan or debt. It is focusing on Series B. And we also launched a product on the buyout of the early shareholders. This is aimed at Series C and later. And on this slide, you can see some of our success stories. In the first fund, we had eVichess.com and Mythology. And in our second venture capital fund, we had Chili Piper, Gasly, Dostavista, and All Right companies. And those are the examples where we reached the exit, or we had a very great assessment against our initial investment. So that's it from my side. Thank you. Thank you, Mikhail. And now let's give the floor to Ilya. Okay, good afternoon, everybody. My name is Ilya Korolev, and I'm managing partner at IIDF initiatives, and we've invested more than 500 companies at early stages. Classically, we invest not at early stages, and we also invest at Series A in those companies that actually have done our acceleration program and also have done our seed stage. Our main mission is to help the technological entrepreneurs to become global. Starting from the last year, we've been focusing more on such companies and entrepreneurs. Our main focus is pre-seed and seed stages. And from the last year, we've launched a program. And according to this, we invest in companies and entrepreneurs that are going global, and they should have some minimal traction for that. We also invest in such companies up to 70,000 USD at the entrance. We also provide our free of paid program for going global, and we coded customer discovery support or growth support depending on the company and its traction on the international markets. We've been actively investing in partnerships with other investors, and we are quite open to co-investment, and we support such companies at pre-seed and seed stages. For us, the main criteria when it comes to the choice of the startups is the potential of growing internationally, or could be that it has some potential in the Russian market, some great potential, I mean. So that's briefly about ourselves. Okay, thank you, Ilya. Then Michael, the floor is yours. So, the Russian Direct Investment Fund has capital of more than 10 billion of USD, and we co-invest jointly with other sovereign funds, such funds that are based in the Middle East as well as in Asia. For example, in Japan, we also work with European sovereign funds. But as to the venture or technological area, well, actually, we've had it for more than 2 years, and we have a couple of technological platforms. We launched them within the coexisting or existing partnerships, and one of them is a technological partnership up to 200 million USD with the OEM Bagala sovereign fund, and we've done quite a lot of deals in the field of technology and in the classical segments as well. Last year, we also launched the Russian-Chinese Technological Foundation, and this is a joint foundation within the RDIF and CSE, the Chinese corporation. We also have a joint technological platform with the company Thales, and this is one of the leading Middle East companies. Mainly we are aiming at artificial intelligence and machine learning in the United Arab Emirates. And when it comes to the companies that we target, we are focusing on the Series B and later stages, and we try to invest at least 10 million USD in companies. So the revenue, when it comes to the company, it should start with 10 million of USD. This is briefly about ourselves. I believe that today we could also discuss in detail some specific targets and criteria. Okay, thanks a lot, dear colleagues, dear viewers. We are currently broadcasting from a studio. Our colleagues are joining in online format. Fortunately, we don't see you, dear viewers, but please send us your questions. We'll try to answer them. If we can't answer them today in a live mode, then we'll definitely follow up in an email format. Well, as you've already understood, we have the representatives from the different stages here, starting from pre-seed and seed and ending with the later stage. And so this is just a life cycle of venture company when it comes to first attraction and then ending with a successful exit. When the company has the first money coming, well, it
3F. Friends, family, and fools.
Has it from a 3F model, friends, family, and fools. And if a company doesn't have this first 3F money, then for us as venture investors, it's quite difficult to make the first step. And we need to see that somebody else believes in a company apart from us. And the first people who can do this is the accelerator, pre-seed and seed stages. Ilya, could you please tell us about the filtering in an accelerator? What results have you got, and what a company has to do to maximize its chances towards the accelerator and after the exit from it? Yes, thanks a lot. Thanks for this question. Indeed, initially, our fund was actually spray and pray accelerator model. So we invested in a number of companies that were coming to us like once per quarter, and at the entrance in each of the quarter we had more than 750 applications, and about 5% of the companies got to our accelerator. And after it, we've made an investment decision whether to invest at the seed stage, depending on the company's performance and growth. And starting from the last year, we changed that model a bit, and our accelerator program, Go Global, which helps technological entrepreneurs to go international, it has become open, and anybody could apply for it on a paid basis, and anybody could participate in the acceleration program. And companies that are currently of investment interest for us, for them, we actually approach them directly and we deal with them directly. And our investment team does this from the very beginning. And we help and we work with those companies who has some initial traction and some strategy of going global. They also should have an approved business model in Russia and the business model how to go international. We invest up to $70,000 to do with some customer discovery at target markets. And target markets for us are such as the US, the Western Europe, as well as Southeastern Asia. So these companies receive our customized program from us, and we do tracking as well as the expertise for them. And within this program, over the period of 3 months, the company should confirm their business model on the target markets. And after that, we can also review whether the company is applicable for the seed stage, and we can can invest up to $1 million to check against the scaling up in this market. And now to increase the chances of going into this program and going not under the radar, but just within the radar, the company has to get some first customers or minimal traction in the US, in Europe, or in Asia. The world is changing, of course, and we do understand that for a venture investor, the Russian market, the purely Russian market, is quite a limited one. Here I'm talking about the investment potential. Not a lot of customers, buyers, not a lot of capital when it comes to the later stages for just the development in the Russian market. Well, there is a very limited set of capacities. And of course, the world is changing, the globalization has come, and the creation of business has become more easy, especially when we're talking about international patterns from the very beginning. So to answer the question on what are the criteria on how to increase the chances of working with us, first, to have the international potential, and then the founders should be quite aggressive. I mean, here they should be aiming at the development on the target markets. And so from the very beginning, when you build your company, it's very important that you have this global vision. Here, I mean, how will you integrate into a global system? What advantages and benefits do you have when it comes to the comparison with other players in the field? And how will you build your activities in this area? Okay, so from you, vision and global ambitions. Okay, thanks a lot. Then Islam, the corporate accelerator. What's the difference from just a usual accelerator, general one, and when it's good to go to this one? Well, I'm not sure actually that this is only about the corporate accelerator, but I believe that we can divide it into two types. The first one is the one that is quite close to just a classical accelerator, and their main role is to develop the companies, to capitalize the companies due to the acceleration and provision of some services. So it's a kind of a partial consulting. There are some examples like this, but there is another category of corporate accelerators, and the gist of them is not the testing of the global strategic hypothesis, whether you can build a large company in this market with this product. No, but it's about more short-term thesis and hypothesis testing, whether the startup can become a very good sales channel. So the final goal of the second type of accelerators, and our accelerator is quite close to the second one, our main aim is the creation of partnerships through piloting and scaling up of these partnerships. So those are the different elements of the one system. Where to go to a corporate accelerator? Well, I believe that you should take a look at some specific companies, etc. A lot of very powerful entrepreneurs actually don't need an accelerator, and they can just go there quite independently. There are some products that indeed need a good package in a positive sense to get some very good commercial partnership with the corporation. Well, in this respect, I believe that corporate accelerator without any share in it is a good opportunity, because if you have a product that could be scaled up, well, you can go to a corporate accelerator like this. And so, when it comes to the accelerators, the entrepreneurs participate in them, and after that there are pitches that are organized, and quite often after accelerators, companies attract some very good series and rounds. Well, at Flashpoint, do you participate in these kinds of events? Yes, we do. We are invited to these kinds of events. I can't really say that we invested within the organization of a demo day. We haven't, but it's a very good opportunity to meet some companies, to get to know them, to see how they are developing. And if it's a good development, then at a later stage, Well, when there is a product market fit already. So what I mean here is that when it's evident that the product is working and that there is market for this product, I believe that this is exactly the moment when we can join the company and chip in it. Well, the communication with accelerators is very important for us, so we are in touch with the regional accelerators as well as with the American ones, such as Combinator, for example. And I believe, indeed, that accelerators is a very good and useful player in the ecosystem. But one needs to understand that the accelerator is not for everybody. The accelerator is very important for those entrepreneurs that within their understanding of the business or maybe within their team, they lack something. So when there is such a shortage, then the accelerator can really address this problem, because there are sometimes some teams and companies that have it all in place and they will not require the participation in any accelerator. And so, as you know, there is no common pattern for that. It is very individually done. Okay, so let's assume that you liked a company during a demo day or in an accelerator. So you started to follow it. Then you see the emergence of product market fit. Then comes the Series A, some profit. And you invest mostly in Series A, not only Russia, but globally as well. What are you interested in? What is so important for you for that particular moment? Well, it's a good question, thank you. We are interested in a combination of factors. The first one is, of course, the team, because even at Series A stage, there is some product, there is some traction already, there is some revenue, some indicators, and other aspects that we can see and touch, so to say. But we really try to project the future here. And the main basis for the future projection is the understanding of the team. And
it's a very difficult question, because we accepted the strategy that we should invest based on factors, but how can you estimate objectively the quality of the team of these people? Because we prefer teams where there are several founders. If one founder fails, still the team will develop. Secondly, we like teams when people are not the same, not similar, because we like when all people are different with different skill sets. We also pay attention to dynamics between teams when they present their business, how they cooperate, how they interact, and whether this interaction is good. And I think that our work today became difficult, more complicated, because we like to come to office to these people, what happens at this office, and it was an essential part for us, the essential part of the research. But now the majority of people maybe don't have offices, or it's impossible to come to this office. Besides the team, the most important thing is to understand quality of products. In our opinion, the best companies are the companies where product is amazing and quality of products is proved by customers and other people who touch this project. So when our customers say that this is incredible, which helped me to save money and solve some life issues, we like it. When we invested such money in such companies, they were successful. Firstly, people. Secondly, products. So now speaking about accelerators, you feel in application, questionnaire. At the later stages, we don't have it. We have a huge flow of incoming projects. But is there something which allows you to make decisions quickly and understand that this is not your piece of cake? Yes, of course, we have some questions, like 7 questions. questions. So founders should be from should come from our geography: Israel, the former Soviet Union, Central Eastern Europe. Then we need to have our stage like $100,000 monthly revenue. If the project is far from it, it won't feed. It won't feed us, and we can take it over to some other participants, some market players, if we think that this project is still interesting. We have about 5-7 pre-screening questions. If the company goes through pre-screening, so the next stage we listen to their formal pitch, and then the next stage we have more formal scoring, because the flow is gigantic, and as you say this right, put it right, our task is to select what's attractive out of this information noise. And it's important to be based on facts, not on opinions. And our scoring allows us to gather all the facts together. Scoring answers all key questions. I spoke about team, I spoke about products and market, about competitiveness, possibilities to exit this market, because at the stage of investments we are already thinking about exit. And at the stage of the scoring, we already define the quality of this project and the risk which is linked with this project. If quality is high, in this case, we try to think how to make up the investment proposal. Ilya, in your program envisages that you invest money in the companies of your best graduates. What does it mean? Why is it different? How is it different from other graduates? As I've said, when we enter the portfolio, the acceleration, we work hands alone with them from the beginning at the early stage. $70,000 of investment for us. This is the format of testing, because whether we can work together with the team, whether it moves quickly, can it apply knowledge it received in the course of market research at the initial stage. So at the initial stage, for us, it's essential. As for Michael, I can support this opinion, the team. And if with co-founders we have interaction, and if values are the same, we like how it interacts with customers, with ecosystem. So we have 3 months support program, and then we look at the rapid change of the team, whether it can listen to see insiders from the market, whether it can prove and check hypotheses without going into routine stories. And for us, it's essential that the market where a company goes is huge, is big. For example, $100 million plus company should exist here. And in this case, if we can see that the company is quick, it has quick response, it can listen to all insights. The people speak English very well, fluently. This is also natural. It's sometimes it's limitation for Russian founders to feed international ecosystem. And thirdly, the traction it shows during this time. It should have quite rapid changes in business models. Maybe also we can make some pivots. Foodie company, we invested last year in it. It made a B2B marketplace, and after 3 months program, it made 3 pivot business models. And it grew like about 3-4 times. So for us, it's important to see quick changes, and founders should have this aim to seize the market. This is a good indicator.
Знание английского языка
Without
тяжело.
English knowledge, it's difficult,
Тяжело
of course,
набирать людей, которые
to
помогут это
recruit
сделать, даже
people
если
who can even
сами
help you to do this
концентрируются
if
на другом.
founders are
Ислам.
concentrated on something else.
Корпоративно.
Islam.
Мы сейчас поговорили про
Now, so we
деньги
have
от
spoken about
институциональных
money
инвесторов,
from institutional investors,
рыночные деньги,
market
корпоративный
money.
венчурный фонд. Корпоративный венчурный фонд
Our
активно
corporate venture
развивается по всему
fund
миру.
is
И
developing
они
actively
появляются в России.
throughout the world.
Вы уже сделали
It
несколько
also
сделок.
it is
Расскажи,
also in
пожалуйста,
Russia. You
про
have made
корпоративный
some
фонд.
transactions. Can you
В чем его
mention about the
особенность?
corporate fund?
Чем он отличается,
Why
на
is
твой
it
взгляд,
different?
для компании,
How
для
is it different
предпринимателей от классического венчурного фонда?
from a classical venture fund?
Да, спасибо за вопрос.
Thank you very much for your answer, for your question. Sorry, corporate venture investments are also developing quickly, and mostly direct investments come to startups, but the difference is possibilities.
Мы не совсем one-trick pony.
We
Больше, чем один.
have more than one use. One advantage, not only good partners, funds, and expertise network, we have some other possibilities. First of all, this is a distribution, possibility to develop and grow revenue through channels of corporation. Secondly, I can speak about some other possibilities, and we can see the first smart money in real life. This is an opportunity to reduce cost of attraction through data. Not all data can be received from the street, so to say, at the stage of the startup. There are different ecosystem models and some other possibilities. A significant part is a number of people to whom you can apply. Expertise, product expertise, back office expertise, tax expertise. And there are some other unique things. There is also a unique thing. This is a possibility for the end M&A, buying of the company, and we as a fund, we do this cash out, but this is, if we speak about buying out the company, this is a unique ingredient, and within the framework of Russian market, this is the combination of smart elements, and we can go to quite competitive stories, and we like it very much. So for the corporation to go through, to go from 0% in the company till 15% is also difficult. The same as from 15 to 51. We'll speak about it later. From 15 to 51. We are coming to the next stage. The company is growing. It's attracting financing from investors.
Следующего этапа
Of the next stage.
появляются игроки late stage.
There are players late stage. Michael, for PE, you are with us. You are a gigantic Russian fund. How do you invest in startup? What is startup for you? Thank you very much for your question. We, in spite of the fact that we focus on later stages of investment, we try to monitor the companies starting from A series or even earlier. We have quite a big incoming flow of projects, and again, some part of them we can't finance because of some criteria. Maybe the stage is not late enough, or maybe doesn't meet some certain criteria. But with the founders of the company, we are always in touch. We keep in touch with them. We are waiting for the company, for the stage when the company meets our criteria. So sometimes we recommend to invest in this company for our companies, for our partners. And when the company reaches B series, we have quite sustainable relations with founders, and then we can invest into this company and we can build up long-term, mutually profitable relations. So this is one of the thing. So we start from a very early stage, monitor this company, and then we can invest into this company at a later stage. And sometimes this is already a big business when we invest. But on the other hand, we only can learn about the startups at a later stage, because maybe our partners say about this who invested at an earlier stage. So we communicate with our partners, so we can ask some questions, we can monitor evolution of the company, and this also allows us to form a pipeline. Answering the question, what is a startup for us? A startup is a company for us which we monitor starting from the very early stage and invest at a later stage when the company attracts round B, round C.
Mikhail Szalontay.
Michael Szalontay, you also mentioned that in Flashpoint you have tools, not equity. What stage can we use them? At what stage can startup use them? Yes, we have a tool, venture debt, which is called. So if we look at the world from the point of view of a founder, venture capital is quite an expensive tool of investing. Venture capitalists want to earn 70-100%. We want to make 10x if investments are successful. Venture debt is a different tool, and the idea of this tool is that the founder works at cost of investment attraction. And so weighted, diverse venture capital. So some part of capital, which is debt, is cheaper, and it reduces weighted average cost of capital. Our venture product is just like a loan, like 3-year loan. It's amortized the same as a mortgage. And when venture capitals, they earn minus, and if it's good, they earn 70-100%. But venture debt, if it's a bad situation, 10-15%, and if it's good, 25-30%, much less than venture capitalist. And this product is given additionally to venture capital. It's like a pie with layers. It's like an additional layer which is given by investors besides the venture capital, which is attracted by the company. For example, for Series B, the company has a choice. It can attract $10-15 million of venture capital and use it, and if they succeed, so they will pay 70-100% annually, or they can invest 70% from the size of round, for example, $7 million of venture capital and $3 million of venture debt. In this case, they reduce the cost of capital on average. Merchant is a very important point because Series B founders have already their share is reduced and it's going to the threshold of 50%. Venture debt allows them to preserve share, a bigger share, and to preserve control over their business.
Mikhail.
Okay, so at a late stage, so some startups go to a late stage with less than 50% the share of the founder. What is your
Для вас здесь что такое хорошо, что такое?
what is your opinion about it? Is it good or bad for you? I can't say that it's a sufficient limitation for us. Of course, we try to monitor this, that our interests, investors' interests, should meet the interests of founders, or one founder, several founders, it doesn't matter here. But very often we can obtain this not only through a big share of founders at the moment of our entrance, but the team of founders can do this through the shareholder agreement or some other KPIs which can be set for founders for them to receive this through additional shares. So interest can be also so the share of the founders won't be, so reduced. The share of founders should be 25-50%, but through the shareholder agreement, through additional options, you can also make the interests more consistent, and the founder can be really also interested and motivated to grow business further. And other businesses, other interests won't distract him. That's why 25-50% of a founder's share is fine with some additional options. But when startup reaches the late stage, 3, 5, 10 years in Russia maybe even, life circumstances change. We are all people, we are all human. Very often later, sometimes some early founders will be formal in the company. Mikhail, you also have a tool which is aimed at solving this issue. What about liquidity? Yes, we created the secondary fund, and actually the secondary fund tries to solve the issue of potential liquidity on this journey for many players. Very often we see successful startups at the initial stage before the successful exit can have 12, 10 years. It can take 10, 12 years. And Ozon, for example, it took for Ozon 21 years. That's why some participants are getting tired. It concerns seed investors, Series A investors, but our funds are, urgent, 10 years fund. So sometimes we have this pressure to give money back to our investors. The company can feel great, can show good results, but maybe it won't be an exit. That's why we invented this secondary fund, and its goal is to give liquidity for all participants of this journey. Of course, founders who left the company and the founders who continue to work in the company and stay motivated, they also are customers from the secondary fund, and we are ready to buy out any participants, and we believe that these funds and possibilities of this liquidity it's not so often, a few and far behind, Sometimes they don't have goals to give this opportunity to remove money from the table and to reduce risk. That's why the product is very exciting. We launched it recently. The demand is not high, and I believe that we are at the right time, right place. And the only thing which embarrasses me that some world finances are on peak, the later stage, and more markets influence on evaluation. There is always this desire to earn money on each product, and this secondary product. So there is tension between buyers and purchases from the point of view of price. At the early stage, tension is lower. There are some preferences. And speaking about secondary investments, when you buy out the share from people, this is alive money, this tension is high. But when someone removes money from the table, tension is always getting higher. Islam. Coming to a corporation, it can be M&A, or the corporation comes and likes the startup, it decides to buy this. Or it can be another road through corporate fund. What journey of control is there? How does it work? You mean control? From the point of view of startups, entrepreneurs, how does it look like for them? How do they understand that life is good and they can relax? You can relax only when you removed all money, withdrew all money, you bought your share, and you are calm, because you don't want to do this anymore. So we don't have any guarantees, neither for us as venture fund or for entrepreneurs, just more exposure, influence of the corporation, and desire to be at this market, to be present at this market. M&A happens because there is something that corporation wants to buy. It can be technological M&A, quite rare in Russia, or it can be maturation of the market or the share at this market. It's more classical. It's a more classical M&A. So we need the market to be mature, the customer to be mature. So the consumer wants to be at this market with a maximum share. When we invest, we receive the share on. So at the beginning, we solve a lot of issues. If Russian market is not important in this case, we won't make minority investment.
Понятно, спасибо большое.
Thank you very much.
Mikhail,
Michael,
РФПИ
in RDIF,
у вас получается, что
you have
сделка большая,
this, the transaction is quite huge. It takes a lot of time, and we know that at early stages, when startup raises money, it understands that it will spend it within 24 months. It's in a certain cycle, and 1 year later, he will start again. It will start again to fundraising because money is running out. There is shortage of money. The transaction at a later stage, it can be long. What can the company do in such situation? When should it start communication with you? And how long will it take, this transaction? Thank you very much for your question. I can say that we support the connection with the company at an early stage, as I've said, as I've mentioned. And the company has an opportunity to evaluate time which we spend for transactions. We have certain opportunities, how the previous rounds happened for the company regarding due diligence, negotiations, and it can form some expectations from each of the party. Because I think that in such questions, we should have the management of expectations. Each party should understand what it counts on and how long will it take. Nobody should have any surprises and negative surprises as well. Speaking about our periods, we try to do transaction within 3-4 months, and this is a little bit more than the time which is spent by earlier funds at earlier stages. But usually at our stage, our requirements from the point of view of due diligence are higher than the funds at early stage. But still, we have examples when we closed the deals within 3 months, or sometimes it takes longer. It depends on agreements and how we worked at this. And, for example, sometimes we have deals where all terms are agreed upon, and then we need to do due diligence or to make changes in documents. There are some deals which, at the stage of term sheets, only some key basic things are regulated, and the process of document alignment will take time. But basically, this will take 3-4 times, which we try to fit, and we succeed in this. Term sheet. If you work at term sheets thoroughly, this helps a lot. Mikhail, I have the last question for you. You have very good results on portfolio, and surely your companies in which you invested attract many rounds. What are your positions regarding investing? Is it good to have a good fund on board which can support you all the way, or are there some milestones? Bottlenecks. I can answer this question, and Michael maybe can add from the point of Flashpoint. Speaking about FOP and our company, our partners, we try to build up long-term partner relationships. We support our companies in all situations from the point of funding and supporting with our big portfolio. And for small companies, we can give the possibility to work with our other portfolio companies and partners which have a sufficient part of Russian economy. And this is also significant. Besides just additional financing, and Ilya spoke about this, I agree with him that in Russia we don't have a lot of capital, but still during the last year, a number of players who have financing, so their number is increased. That's why financing is a very important product, but very often besides this product, companies and startups, they don't only look for financial investor, but also partners. That's why long-term relationships from the early stages, finance and support through the portfolio company is what companies are looking for, and we as a fund and our partners can offer this to you. Earlier, the company gets a big fund or fund with such opportunities to their capital, so the simpler it will be for them from the point of view of development, of getting new customers. It seems to me that the prospect from the point of view of funds and the company founder are different. For example, our vision as a fund is the same as RFP has, and when we form a new fund, we think in advance that 50% of all means which we have in this fund will reserve from follow-on from additional investments in a successful company. It's quite easy. When we did our initial investment in any company, 6 months pass. At the board of directors, we have a flow information from this company, and much more than flow information which we can cover through the help of due diligence. That's why we have this quite asymmetric information, and it goes away. That's why if we have to do follow-on, it doesn't matter when, the risks are reduced. If a company is going well, we know everything a lot about this company, much better than we understood at the early stage, and the price increased by 2, but risks reduced by 200 times sometimes. That's why this investment regarding quality and profitability ratio is much more attractive. That's why for us, if we have this choice to invest in a new unknown company or support the company which we know well and which is successful, of course, we'll want to receive money from a successful company. And generally speaking, Chaykin, so we have these two funds. We can see this profitability in the fund is formed through the follow-on investments. That's why for us as a fund, this is task number one. But for the company, it can be different for founders, for example, because if we speak about this from the point of view of founders, and if Series B is supported only by Series A, and you don't have any new fund, this is a bad signal for the market. It means that you can't convince external partners that your business is attractive to some degree, even for those who are inside and who have follow-on. So it's not good. So we want to have this external proof of the price of the company, and only external players can give this. Because if we are inside of this company, the price is not so important. We can solve this with options and so on. But there should be an external investor who supports with new money, gives new impulse, which is also sometimes important, gives new knowledge. And we believe that from the company's side, at each round, there should be a new lead investor. And of course, we want to support everybody in the company. And we support the company through many stages. We have situations when we put money into the company 10 times. I think it's good if you can have it. Thank you very much for the comment. I also want to add, if it's possible, because we also have the same strategy, and we can give 50% of fund for follow-on investments. And so at pre-seed stage, we looked at the dynamics. Then at round A, we can add some money. And also, we pay attention to new investors. We pay attention to the fact whether the company attracts new investors at each round. For us, it's important. And then we also pay attention to co-investments. We can support company till $4 million, but if we attract more from other investors at other stages, so in this case, the company feels more comfortable, and then it goes through different stages. Thank you very much, Ilya. Colleagues, thank you very much for the discussion. Dear viewers, listeners, you heard a lot of information from practical people from this industry, how the company attracts money at the early stage and how it attracts money at later stages. So you spoke about exits, tools, secondary tools, late stage, entering the corporation. We have several questions from you. Some part is dedicated to space industry. We'll answer them separately in a written form. Thank you very much, colleagues. Goodbye. Thank you very much. Have a nice, good day.